Hello, welcome to the Trading Bell. I'm Nokip Kimboy, and today we're talking matters Islamic finance. On the continent of Africa, we have over 250 million Muslims, and there are tailor-made products in the financial sector that these people can utilize. At the same time, it's not limited to Muslims. But the question is, what are these products and what benefits do they hold for the general populace? I mean, in Kenya right now, one of the biggest issue is getting credit. Is there a solution in that front? Well, to give us context into this discussion, I'm joined by Mr. Faizal Bhana, who's the Director, Middle East, Africa and India for Jasi Finance. Thank you very much, sir, for joining us. Starting off the issue of Islamic finance. When you talk about Islamic finance, what exactly is it?
Thank you very much, Noah, and a pleasure to be on your show. And a good place to start. I think Islamic finance is generally understood to be a form of faith, finance based on principles of faith, and here being Islam. However, to understand it a bit better, Noah, I think it's important to understand some key principles of Islamic finance, so that this puts the Islamic finance into the context of wider conventional finance. So, for example, in Islamic finance, you have a prohibition of earning or charging interest, which is regarded as usury. Similarly, investing in harmful industries like gambling and tobacco, etc., is also prohibited. And the Islamic finance is a system that is based on investment and investing in underlying business activity, as opposed to just pure lending, because there is no intrinsic value to money from an Islamic finance perspective. There's got to be an underlying activity, underlying investment that is taking place, and from a purely simplistic perspective, initially the developments in Islamic finance, several decades ago in the 70s, was driven by a need to provide access to the unbanked. You touched on the 250 million Muslims that live within Africa. And if you look at Sub-Saharan Africa, for example, you have 16% of Sub-Saharan Africa is Muslim, but 80% of Sub-Saharan Africa is still unbanked. So there was this bridge being built to say there's a demographic of people that want to bank in a specific way, not the traditional, conventional, because of their beliefs. And this is how it started. But the journey has moved on as we've progressed, and it's been accelerated by this pandemic period that we've had. The disruption from tech and the need for people to use technology to live has disrupted this space. So now what we're seeing is that Islamic finance has come to the fore in mainstream because of its shared values around ESG. So the ethical, sustainable and governance-based system resonate from an Islamic finance perspective. They share very many similarities in terms of the objectives. So now you have people that are not necessarily coming to Sharia-compliant banking as a result of their faith. They come to it as a result of the shared objectives, targeting community, impact investing. These are the kind of things that the Sharia-compliant financing has it built into it from the outset.
All right. So let's take a look at some of the products now, the specifics into Islamic finance. You've talked about the issue of no interest, but you share in the profits. One of the biggest products that is trending right now, especially with the global economy being hit so hard and governments looking for money, is the issue of Sukup, which are bonds. Explain to us the benefit of what exactly is Sukup and how will it help in the recovery of African economies right now where we need money?
Yeah, so I think, and you're absolutely right, Noah, Sukup is probably the standard bearer across the globe when it comes to Sharia compliant financing, because this is what you see a lot of from a corporate and a sovereign perspective. And you've rightly made the similarity there that the Sukuk is the Islamic version of the conventional bond, but it is very structured in a very different way. Again, I go back to the point I made earlier. From a generic perspective, there needs to be an underlying economic activity, whether it's a leasing arrangement, whether it's a partnership, whether it's a sale and buyback, etc. That needs to form the basis and the structure of the Sukuk itself. But essentially the cash flows that investors get from the Sukuk are designed to mirror what you would get on the conventional side. And the whole point of this is because, you need to create the market for the Sukuk, and you cannot have a product that is alien to, investors. You know yourself, institutional investors want to be able to invest and get a return on their investment. So the cash flows mirror what you would see on a conventional side, but the structure, the underlying structure to achieve Sharia compliance is designed to highlight the economic activity, to capture that economic activity, ownership, lease arrangement, etc., to give you that Sharia compliant stamp or product. Now, in terms of the success of the Sukuk, so the global Sukuk market in 2019 was $146 billion. And that's an 18.3% increase just from a year earlier in 2018, and a staggering 499% increase from a decade ago in 2009. So that gives you an idea from a global level, how important the Sukuk market is, because it's a way of providing liquidity to the banking sector, the Sharia compliant banking sector, but also, like you very rightly pointed out, in emerging markets and also in more developed markets, it's used as a tool for infrastructure funding. In this post-COVID era in Africa, governments are going to need to raise capital, and they're going to need to find different ways of raising the capital just to bring back economies to a level that they were pre-pandemic. And then, you add into this, Noah, the Africa Continental Free Trade Agreement, which is going to open the continent up. So from a corporate perspective, you're talking about scaling, to a level that you can benefit. Kenya is a pioneer in this agreement, as you know, the first signatory, first to ratify, etc. So, we expect certainly from the Eastern region, the conglomerates that you have here, the family business conglomerates, quasi-public sector institutions to try to benefit fully from this continental trade agreement or trade area. And to do that, to be able to do that, they'll need to find novel ways of raising finance. And doing it through Sukuk is one way of achieving this. And there's been immense success over the years. For example, Nigeria has now had 3 sovereign Sukuks that have been issued. And the last one in 2020 was 4.5 times or more than 4.5 times oversubscribed. Similarly, in 2014, South African government did the same, and theirs was 4 times oversubscribed. They're looking to issue a further Sukuk this year or early next year. We know there's been talk of it in Kenya itself to see whether that can be done in Kenya. I think what needs to be done, Noah, is that governments need to realize the potential of the Sukuk, move away from the politics of religion and faith, and look at the pure economic benefit here for the country, for the corporates, for the people, and say, okay, let's provide enabling legislation to allow for these instruments to be issued in our market, obviously governed under the auspices of the central bank and the Capital Markets Authority, to ensure that they're playing the game within the rules of each of those markets. But once these enabling legislation come through, then it allows these Sukuk issuance to be at a sovereign level, helping the country and helping government to meet some of its targets, not only reducing debt, but infrastructure and other ambitions that they have. And similarly, on a corporate level, it gives the corporates the ability to then scale up and take full advantage of this of this coming through. In our jurisdiction in Jersey, Noah, we have a platform that is based around true parity under the law. So conventional or Sharia compliant products or any kind of products that are offered on the financial services area are all governed under the same rules. All have equal opportunity. None is disadvantaged. Obviously, then that gives people the comfort to know that we can come through there. And for international Sukuk issuances, we have a lot of multilateral institutionals globally and also corporates that use Jersey as a platform for their issuing vehicles so that they can raise capital globally.
Another issue again, when we look, when you talk about the agricultural sector in Kenya, we say the average age is at 60, and we need to bring that down if agriculture is to change. Now, looking at the Sharia compliant financial sector, people majorly utilize this sector in a big way. What is their age structure, and is there a way to widen the margin, because there's always room for improvement?
Yeah, I think you're right. The perception traditionally is that the patriarch generation is more religious conscious and more conscious of impact to community. So this is where the main activity lies. And we undertook some research in 2019 focused on private wealth, and we looked at the emerging sort of trends within that sector, including in Africa. And it was interesting. So we found that immediately the results were that the 50 plus bracket was the demographic that was making the decisions from a family business perspective in terms of finances. But interestingly, in our research, find that in the coming years, in the coming 5 years, that was going to shift to the 30 to 50 bracket. So what that means is that these are young, tech-savvy, global citizens who are conscious of making an impact around them, that are now coming to the decision-making table. And technology, we go back to the impact of this crisis. One of the positives that's come out of it is our reliance almost on technology to get by for day-to-day things. Young people are naturally tech savvy, and they want to be able to make informed decisions based on all the information that they have at their fingertips. So that shift is going to we've seen it in our research, and it's being played out over the last year and going forward. All the decisions are now being taken by this young population, and Africa is at an advantage for that, because obviously it has a huge young population that is coming and becoming into the workforce and coming into the middle classes themselves. So I think as we progress there, I think this is naturally going to take a shift, and we're going to see that it's not going to be about faith-based decisions. It's going to be more ESG and how can I do good? I'm going to have, I want to make money, but I want to make sure that I'm making money in a way that also supports the people around me, communities around me, and I'm doing good. And this is what we see in the trends that we see.
Definitely. And you've mentioned Nigeria, which is Muslim dominated, and the way Islamic or Sharia compliant financing has been critical. But we also see a big element in Africa, and this is to do with corruption. I mean, for corruption to be there has to be an element of a financial system being complicit in a way. So in terms of Sharia compliant finances, how can that help deal with the issue of graft that is breaking Africa down?
I think that's a very good question, and unfortunately it's the sad reality of the current state of affairs. You pick up any newspaper and you see that there's these issues happening across the continent. I think the first point to make here, Noah, is that the financial services, the financial services infrastructure in every country, as I mentioned earlier, is regulated by the central bank and the Capital Markets Authority in terms of certain products and services. that is going to be a given, whether that financing is Sharia compliant or conventional or green finance, etc. That's going to be a given. The challenges you have on the conventional side will be the challenges you have on the Sharia compliant side. The only thing I will mention from a Sharia compliant that is quite different, and this is where it now moves into the mainstream, is its similarities with ESG. And you know yourself, from your own work, that ESG is about transparency, it's about openness, it's about good governance, and these kind of principles are emanate from the very start. The investor expects this kind of scrutiny from the very moment that he gives you his first cent, right up to when their wealth is growing. So that kind of scrutiny that comes in through that angle is something that is quite unique from a Sharia compliant financing perspective, because it's inbuilt within the system. These kind of checks and balances are there in order for it to be compliant. For it to be Sharia compliant, it needs to achieve this. So, I'm not saying that it has a unique advantage over the conventional system. Like I say to you, we go back to the regulator and the regulations in every jurisdiction. Every jurisdiction has fantastic, strong, globally recognized standards in terms of their finance industries, because they're critical. People put their life savings into these products and services. So the regulators in every country, whether it's in Nigeria, whether it's in South Africa, whether it's in Kenya, Egypt, they're very on top of this. But what I'm saying is that I think from a Sharia compliant perspective, we have this dynamic of similarities with ESG, and we're now seeing the importance of transparency and the transparency agenda globally.
Definitely. And you mentioned the space of tech, especially having a young population coming into the Sharia compliant, finances space, where being tech compliant will be very important. Also looking at the same thing, the SMEs, which are the backbone, the foundation of our economies in Sub-Saharan Africa. How will they benefit from, widespread use of Sharia compliant products?
Yeah, so I think 2 points that you've raised there, very important point. I think the first point is the tech, and we've seen the disruptive part of it last year to the benefit of consumers globally. And that's across sectors. It disrupted the industries that it was introduced into, but to the benefit for all of us, effectively, because we're now using it to order our food, to do our laundry, to get our taxis, etc., and now increasingly to do the banking. So you have the traditional banks, Noah, that are creating their digital roadmaps and their transformations internally, and they have realized that the importance of digital and the importance of innovation in being relevant for the future is critical. So Kenya is a tech hub, and from there, if you look at all of the innovation that has come out in the last few years, majority of it is in the fintech space. And it's a pioneer when you talk about Kenya, because the M-Pesa is actually is the most successful fintech solution, I would say, probably in the continent. And Kenya was a pioneer at it many, many, many years ago. It's so established in the market there that it's unbelievable that it's not working in other markets as good as it is in Kenya. So I think tech is going to play a critically important role in there. And from a Sharia compliant perspective, you have these traditional banks that are now obviously digitizing, and they're having their roadmaps for digital transformation. But then you have these challenger banks that are appearing in the Middle East. We have some in the pipeline that are almost got their regulator approval. In the UK, the similar situation. These are entirely online banks, no branches, no sort of people to interact with. These are all based on apps. And it will be very soon when you see the same kind of banking appear to challenge the status quo, even in Africa. Obviously, within the parameters of the regulation that is in each of the jurisdiction, that is very, very important, because obviously consumer protection is the most important factor in all of this. But these kind of exciting developments, open endless possibilities. As you know, with your experience on the finance side, you see that on your equities. Imagine having this open banking platform, Challenger Bank coming in and saying, you can bank with us, transfer, convert your currency, but there's no added cost of having branches. And obviously, it helps with the cost, it helps with the competition, it helps with access and bringing scale to that sector. So I think, from a tech perspective, this is the trends we see, and this is only going to increase. And the SME sector, Noah, I think Sharia compliant financing provides the ideal solution for that backbone of every economy in the globe. And the reason I say this is what I alluded to at the very start, which is this form of financing is based on shared risk and reward. It is put your money where your mouth is, as opposed to just giving you money to borrow and pay me interest regardless of whether you're successful or not. This is the real deal. This is people stepping up and saying, you know what, we want to invest with within your venture. So it will resonate with SMEs. And I think this is why this enabling legislation allowing financial institutions, whether banks or other kinds of institutions, some specialized funds to operate, it's important to have that availability in there so the SMEs can benefit, because these are the future conglomerates of the continent, of the globe. They all start off, from the garages. We've seen the pictures of these large multinational, big tech players on the globe. They started from their garages to become the big players that they are. The same, and the most entrepreneurial people, obviously, within Africa, in East Africa, I've said that, it is in East Africa, because this is where the drive has been for the potential for this continental free trade area, and this is where we're going to see the unicorns of the future, from the tech space.
Definitely. And as we head to the tail end of this conversation, with every sector there needs to be strategy. I mean, to understand Jassy Financial, you came up with a strategy, specifically for Africa, in terms of boosting your products. What are these strategies, and what are the intended, the timelines, and also the intended results?
Yeah, so I think from a jurisdictional perspective, obviously, we have always been a partner for Africa. We have always, we've been working in the continent for decades, and we've been working with governments. Our government is engaged with governments on the ground, on a government basis, on various initiatives. We see our role as a jurisdiction and as the finance industry within our jurisdiction to provide this platform to African entrepreneurs, but also international investors looking to invest into Africa, but those increasingly globally looking entrepreneurs from Africa that want to expand globally. We provide this highly regulated, globally recognized, award-winning platform, international platform with robust rules and regulations. I already talked about the parity under the law for the conventional and the Sharia compliant financing. We have deep expertise and experience in various areas. So if you just look at Sharia compliant financing and ESG, we have decades of experience on our island. And this provides the ideal platform for both inward into Africa, but also for increasingly for African entrepreneurs who are looking to become global players themselves. So this is where, and we see the next 5 to 10 years as being the critical period for this, because we're now coming into the new norm, coming out of this pandemic, where the governments are now going to look to scale up massively and also take advantage of this free continental trade area that's been created to scale up from a business perspective. They're going to expect their businesses to do well. And Jersey and our finance industry is here to collaborate and partner and help realize some of these ambitions.
That is very important to note that strategy and how it impacts, Africa and the markets and jurisdictions that you're in. Closing up, of course, post-COVID recovery, briefly, we have less than a minute. What is post-COVID recovery, especially for Sub-Saharan Africa, pegged
I think increased access, better use of technology, and government stepping up and providing enabling legislation and welcoming foreign investment and foreign players into the market so that they can provide their expertise to scale up the abilities and the ambitions of people on the ground in Africa.
Okay, thank you very much, Mr. Faizal Bhana, who is the Director, Middle East, Africa and India for Jasi Finance. What an exhilarating conversation. Well, there you have it. Nogib Kimboy. Up next, let's take a look at the markets, shall we?